Hello everyone, welcome again. In this lecture we are going to look at very important topic of ACCA taxation exams. Now whether it is F6 or P6, this topic is very important for both of these exams. If you're watching this lecture for F6 purposes, then good news is that you will have to see this exam, this topic again at P6, assuming that it will not be abolished from the exam syllabus. If you're watching this lecture for P6 course, then you have already seen this topic earlier at F6 level, and you might have forgotten, however, but don't worry, we will see from the start to the till the end of the topic. So with the help of a couple of examples as well, so you don't have to worry about it even if you have forgotten. If you're watching this lecture for F6 or P6, then this lecture is relevant to both of the courses, so it is exactly the same. However, the next video will be only for P6, so you will only find in P6 section. Excuse me. Now, before we move to basis period, if you have given P6 F6 earlier, then you might remember that this was one of the horrible topics of F6, and even at P6 level as well. I've seen many students struggling with this topic because it is one of the very complex topics of ACCA taxation exams. Now, if you're taking this, if you're looking at this topic for the first time, then you might start to think, oh my God, it is a new topic and it is a horrible topic as well. So how we are going to deal with it? Good news is that with the help of these examples which I have listed down on the board, you will not face any problem at all understanding this topic. Although it is very difficult topic, but with the help of these examples, I will try to explain it in as much detail as I can, and hopefully you will not face any problem. Now, for this purpose, for this lecture purpose, please make sure you keep your notes in front of you, be it F6 notes or P6 notes. Go to a basis period chapter, so that we can go together, we can go through together with the notes as well, because I won't be sharing the screen in this video. I can't do it because otherwise you won't be able to watch me do it on the board. I will be doing ACCA P6 notes, so I will have the notes in my iPad here, so you can open your notes. The topic is exactly the same, so you don't have to worry about it, be it F6 or P6. So you'll have to understand the topic first, and then you can read your notes as well, so it is exactly the same thing. But please make sure you keep your notes in front of you while you do these examples, otherwise you won't be able to understand it. So if you haven't downloaded the notes yet, which is very unlikely, I hope, please make sure you download the notes and come to whichever chapter it is. In P6 note, it is chapter number 7. Alright, now before we start the basis period, could you please tell me that why we need the basis period at all? Basically, the need of basis period is when we make our accounts. Say for example, if I have started my business recently, so I am a new businessman. When I started my business, I did not know anything about taxation, and I was not worried about it at all, right? Because I was only concentrating on my business. I wasn't thinking about taxation. So, and that is the right thing to do, because when I start my business, I will not think about anything else. I will give full concentration to my business, so that how to do the marketing, how to secure a nice place where I can do my business, how to get few people who can run my business as well, who can help me run my business. All right. So these are the things which I will be thinking about when I start my business. I will not be thinking about basis period, or I will not be thinking about taxation. So what happened is that I've started my business. I was doing quite well. Then I made my accounts as well. So while I made my accounts, so when I started my business, I will make my accounts from that date to whichever date I may choose. It is up to me. Say for example, if I started my business on 1st of January, so I'll make my accounts from 1st of January to whichever date I may choose. So I will make my accounts from 1st of January to 31st of December. So whichever date I want to choose, there is no obligation at all. So that was my accounting, accounting data. So I started my business and I made up my accounts. So I made my accounting date as well, which is 31st of December in my example, which I have just given you. So I started my business on 1st of January. I'll be making my accounts to 31st of December, whichever year it is. So that was my accounting bit. Now, after spending 1 year, then I started to think about that I will have to pay tax as well because I was making some money. Then I approached an accountant, and then he told me that, oh my God, what you have done. All right, I said, oh my God, what I have done? He said that, don't worry, you have made accounts to 31st of December, all right, because there is no obligation to make any specific accounts to any specific date. But however, when it comes to taxation, there is something called tax year. Now you know what tax year is, don't you? Tax year starts on 6th of April and it ends on 5th of April every year. For our current tax year, which is 16-17, our tax year starts on 6th of April 2016 and it ends on 5th of April 2017. So that is tax year. Now when I made up my accounts while doing the business, I did not think about this tax year. I was only thinking about my accounting year. So my accounting year was from my, when I start the trade from 1st of January, and my accounting date was 31st of December. So that was my accounting year. I wasn't thinking about tax year. When it comes to taxation, when it comes to HMRC and tax person, now they only account for the tax according to the tax dates. They don't care about accounting dates. So they will be calculating the tax according to the tax year. All right. So because there is a difference between the accounting year and the tax year, so we have to account for this difference. So that's where this topic, basis period, is going to help us. All right. So that's why we need to study this topic, because there is a difference between accounting date and accounting year and the tax year. So we have to, use this basis period thingy in order to get a tax year profit. All right. Obviously, the accounting year profit will be given to us. Now we need to do few things with it, and after that, what we get is a final figure which will go into our income tax pro forma, and that will be our profit on which we will have to pay tax. All right. So that is the story behind the basis period. So that's why we need the basis period at all. All right. So I've listed down few examples here on the board, from example 1 to example 6. Please make sure you pause the video and note down these examples, so that we can we can then start doing these examples. Now it starts from example 1 here, and that is example 1. It says the business is started here, so the business has started here, and the business has ended as well in the same question. All right, so it tells you the accounting years, accounting year, so that is accounting period, and then it tells the profit as well for the relevant accounting period. Now remember, this is accounting period, it is not tax period, so it is accounting period. All right, so please make sure you do all of these. Please make sure you just note down these examples while you pause the video. Alright, then I assume that you have already noted down the examples. So this is example 1, then example 2, 3, 4, 5, and the last one is on the very right side of the board. Alright. Now please open up your notes now, and let's come to the chapter where the chapter starts. First of all, it says the first basis period. Another thing, before we just do the first basis period, another thing is that we will only use this basis period thingy when it tells us in the question that business is going to start or business has ended. So business is either going to start or business has ended its operations. Only then we will use this basis period. If it does not say anything, so if it is a running business, it does not say anything about the starting the business or ending the business, then we will not choose this basis period thingy. Now while you look at these examples, there is always either the business is starting or business is ending in all of these examples. Now if you look at the example number 1, please, it says business is started and business is ended as well in the same video. In the same not video, in the same example. So business is started and it is ended in the same example. And if you look at the example number 2, it's exactly the same. So business is started and ended in the same example, and all of the other examples from example 3, 4, 5 and 6, business is starting, but there is no end date given to us in the examples. So business is just started from example 3 to example 6. So what I mean to say is that we only use the basis period when business is either going to start or it has ended the operations. All right. So there are different basis period: first basis period, second basis period, third basis period, subsequent basis period, last basis period. So there are different basis periods. So we will do each of them from the start. Now, while we start to do the answers of these examples, I've already listed down this pro forma, which we will do. So while you look at the question, few things which we need to do is, first we write down the tax years, then the basis period which we will make. This is the most difficult bit. Then we'll account for the profit. It is also the easiest one, so there is no problem at all. So only difficult thing is about the basis period, because we are studying the basis period. So this is the only difficult thing. So we'll place our answer here, and likewise here. All right. Excuse me. Now, while looking at the question here, I'm at the example number 1. And so we are going to start the tax years first. So we'll fill the tax years of all of these examples first. So we'll make up the tax years, then we will do the other bits, basis period and the profits. All right. Now, while looking at the example number 1, if you have already noted it down, please look at your notebook. Don't look at the board. You can look at your notebook as well. If you haven't noted down, then you can watch me. It's all right. So if you look at the example number 1, so it has started its operations on 1st of January 2005, sorry, and first accounting date was 30th of September 2005. Now this second bit, when the business is closed its account, this date is called accounting date. So 30th of the 9th 2005 is accounting date, first accounting date. So business has started its operations on 1st of January 2005, and its first accounting date was 30th of September 2005. So that was our first accounting year, and accounting date was 30th of September 2009. So this date is called accounting date. When the business is ending its account, it is called accounting date. So what we do is we'll take this date here. So it has started its operations from 1st of January 2005. Could you please tell me that which tax year was it? 1st of the 1st 2005. Which tax year was it? Yeah, you're right. I think it's tax year 45. So go ahead and put 45 here. So that is tax year 45. All right. Now we have already seen this one. Now go back and go at the end of the question. Excuse me. Go at the end of the question, and could you please tell me that which tax year is its accounting date coming under? Which tax year is it on 31st of December 2008? Yeah, you're right. It is tax years 8, 9. So we'll write down 8, 9 as well here. So tax year 8 and 9. So that is tax year 8, 9. Right. So first tax year is tax year 4, 5, and the last tax year is tax year 8, 9. Right. Now you might be thinking that I have left this space here. Now when we know that first tax year is 4, 5, last tax year is 8, 9, so we can always fill the between ones, which are very, very easy. So 4, 5, next one is going to be 5, 6, then 6, 7, then 7, 8, and last one is 8, 9 anyway. So first we do is we'll take the first tax year, then we will fill the last tax year by looking at the last accounting date. Then we can always fill the between ones, which are the next one. So we know that which one is the next one after 4 5. So 4 5 5 6 6 7 7 8, and the last one is 8 9. Now just pause the video here, and please make the tax years of all of these examples, which are very easy. I hope that you can do it at least now. Alright, so just pause the video and try to do the tax years for all of these videos, all of these examples. Let's do the example number 2 now. So it started its trade on 1st of July 2015. So which tax year is it? 15-16. So 15-16 is the first tax year, and then the last tax year is 2021, I guess. So 2021 is the last tax year. So 15-16, it starts on 15-16, and the last tax year is 2021. So you can always fill the between ones. So 15-16, 16-17, 17-18, 18-19, 19-20. All right, so these are the tax years for example number 2. All right, let's do the example number 3 now. We're only doing the tax years for now. So example number 3. So it said it has started its operations on 1st of January 2013. Which tax year is it? 12-13. So 12-13, and the last tax year is 15-16. So I'll just put down as a 15-16. Yep. So 12-13, 13-14, 12-13, 13-14, 14-15, and the last one is 15-16. We can always fill the between ones. So first tax year was 12-13, and the last tax year was 15-16. Let's do the example number 4 now. We are only doing the tax years. So it has started its operations in the tax year 9-10, I think. Yep, so it is 9-10, the first tax year, and the last tax year is going to be 10-11. So it is 10-11. So there is no difference between them. So the last tax year was the next one, because it has started its operations in the 9-10, and it has ended its operations in the next tax year, which is it hasn't ended the tax year, it hasn't ended the operations, but we have only given the limited information in these examples. So we will do the 9-10 and the 10-11. All right, because it does not say it has ended the operations. It only says that the business is ended in example number 1 and in example number 2 as well. It says ends here. So ends means that it has ended its business operations. All right. So for this example, there are only 2 tax years. Let's do the example number 5 now. It has started its operations on 1st of the 1st 2012, which is tax year 11-12. And the last tax year is going to be tax year 14-15. So tax year 14-15 is the last one. So 11-12, 12-13, 13-14, and the last one is 14-15. Likewise, we can do the last example as well. So it has started its operations on 1st of September 2016, which is the tax year 16-17. So we'll write down as 16-17. And the last tax year is going to be 19-20. So we'll write down 19-20 here. 16-17, we can always fill the between ones. So 17-18, 18-19, and the 19-20. All right, so we've only done the tax year for now. The way to do it is that first we will take the start date, which is given to us in the question. So when I say start date, it does not mean when the business has started, but when we have seen the question is started. So question is started. So even if it would have been there would have been no start here, still we would start from the 1st of the 1st 2005. All right. But however, we will only deal with basis period if the business is either going to start or it is going to end its operations. All right, so we will only use the basis period when the business is going to start or business is going to end. If it tells you a question where it says that business is running from few years, and it does not tell you anything about when the business is going to end, then there is no need to do a basis period. Alright, now let's look at the basis periods now. There are different basis periods. We've already done the tax years for all of these examples. I hope that you have done it right if you have done it yourself. If you haven't done it, then just I would assume that just you have noted it down. Alright, so let's move to our first basis period, which on the notes please. So first basis period says from the start of the trade to next 5th April. So it says from start of the trade to 5th April. So what we do is we'll have to see when the business is started its trade. So we'll take that date, and our basis period will be from that start of the trade to next 5th of April. Right? Now please look at the board now. So if you look at the example number 1, it has started its operations from 1st of January 2005. So we'll take our basis period, our first basis period will be from 1st of January 2005. So our first basis period will start on 1st of the 1st 2005 to, so when will this basis period will be up to 5th of April. So it will be 5th of April, next 5th of April, which is the next one, next 5th of April is 2005. Alright, so that is our next 5th of April. I'll just write it down a little below. So 5th of the 4th 2005. So that is our next 5th of April. Alright, so I won't do the profit for now. We will do the profit in a minute, but please make sure you pause the video here. If you got my point, just pause the video here and do the rest. I will do the second example as well, then you can do the rest. So let's look at the second example. So it has started its operations on 1st of July 2015. So our basis period is going to be from 1st of the 7th 2015 to 5th of April 2016. So whichever the next 5th of April is, so after this date, next 5th of April is in the tax year, in the year 16. So it will be from 1st of July 2015 to 5th of April 2016. Now please pause the video here and do the first basis period of all of these examples, please. I assume that you have already done it. So let's do the next one now. Example number 3. Here it is. So it has started its operations on 1st of the 1st 2013. So it will be 1st of the 1st 2013 to 5th of April 2013. So that is the next 5th of April, isn't it? So 1st of the 1st 2013 to 5th of April 2013. Alright, let's look at example number 4 now. So it has started its operations on 1st of the 1st 2010. So from 1st of the 1st 2010 to 5th of April 2010. So that will be our first tax year, first basis period. Alright, let's do the next one as well, which is example number 5. So it has started its trade on 1st of the 1st 2012 to 5th of April 2012. Likewise, we can do the 6th one as well. So it has started its trade on 1st of the 9th 2016 up until 5th of the April 2017. Alright, so the first basis period will be from start of the trade, from the date when the business has started up until the next 5th of April. So we have done it in all of these cases. Now if you look at this basis period for all of these examples and match it with the tax year, I hope that it will match. Now if we look at this date, will this date come under this tax year or not? Yeah, of course it will. Likewise, if you look at this date, yeah, it is within the tax year 15-16. And we will just make sure you check all of these dates, if these dates are within these tax years or not. Now please come to our notes. we've already done the first basis period. Now if you want to do this profit bit, let's do the profit bit as well actually together. So we've already done the first basis period, and we have done the tax years as well. We've already done all of the tax years, but we've only done the first basis period. Now when we have done the first basis period, we will have to check how many months are these. So let's see, from 1st of the 1st 2005 to 5th of April 2005, so these are only 3 months. We'll not count these 5 days, so we'll round it back to 31st of March. So it will be from 1st of the 1st 2005 to 31st of the 3rd 2005. So these are 3 months. So we'll take 3 months worth of profit out of this total £18,000. So could you please tell me, for how many months is this profit for? Actually this profit is for 9 months, isn't it? So this profit is for 9 months, so we'll take only 3 months worth of profit. How can we do it? We can always do it like this. So £18,000 into 319. So whatever the figure is, we will put this figure here. All right. So actually we can do it. I think it's £6,000, isn't it? So we'll just put £6,000 here. All right. So we have done this one, and if you want to do the other ones as well, like that, just pause the video and do others as well. I hope that you've already done it, so let's do it together. Actually, I will pick up my calculators as well so that I can just quickly do it. So it is for how many months? So it's 639 months, and it was for 14 months. So £28,000 into 9 over 14. £28,000 into 9 over 14, I think. Are these 14 months? Yep, they are. So whatever the total is, so it is £18,000. If we do the next one as well here, so this is 18 months worth of profit. So we'll take £36,000 into how many months? 3 months. So we'll do 3 over 18. It's going to be £6,000 here as well. And we'll do the next one as well. So it's from just 3 months, and that one is actually that one is for 3 months as well, so that will be exactly the same. Example number 5. So this one is for 12 months, and we'll only take this for how many months? 3 months. 6,000 into 3 over 12 is going to be £1,500. So 6,000 into 3 over 12. Why we do it 3 over 12? Because this was 12 months worth of profit. We only take 3 months because these are 3 months in the basis period. Right? And we'll look at example number 6 as well. So this profit is for how many months? So these are 9, 10, 11, 12. So for 10 months. So actually this is a loss, it is not a profit. So we'll take the loss. So £46,000. This loss is for how many months? This loss is for 10 months. However, we will take only 9, 10, 11, 12. 4 plus 3, 7 months. So multiplied by 7 over 10, because it is for 10 months, isn't it? So it's £46,000 into 7 over 10, which is coming as £32,000 200. So we can do like that. So £46,000 into 7 over 12. 7 over 10. All right. So this is a loss. So that's why we put this one into loss as well. All right, I hope that you have already done it till here. So what we have done so far is we have already completed our tax years for all of these examples, and we have done our first basis period and its profit as well. So while calculating the basis period, we take from start of the trade up until the next 5th of April, whichever the next 5th of April is. Likewise, we will proportionate our profit for the basis period. So we'll take the actual profit for that accounting period. So say for example, accounting period profit for our first example was £18,000, which was for 9 months. So we'll proportionate it to according to our basis period. So our basis period, first basis period was for 3 months. So we have taken 18,000 into 3 over 9. So it was £6,000 in our first example. And we've done like this for all of our examples. Now only difference here was that because accounting period was for 3 months, that's why we take exactly the same thing. So our basis period profit is exactly like our accounting profits. All right, I'll just wind up this video here, and we will continue this example in the next video. We will see where we will see the second basis period. The second basis period is a little complex because there are different things to learn in the second basis period, and to be honest with you, only the second basis period is difficult. The first basis period was nothing, as you have seen. So it is from the start of the trade to next 5th of April anyway. All right, so we will look at the second basis period in the next video. Please make sure you have the notes in front of you. So I'll quickly go and have a glass of water, and then I'll see you in the next video.